Good morning and welcome back to Market Day Report. I'm Chris Swift. We've had a little bit of time to trade here. Let's see what the corn market's going to be looking at now. Not a whole lot better, but September corn, $3.93 even, down 3 1/4. December, $4.08 1/4, down 4. All the way out to July at $4.41, down 3 1/2. I think that carry charge is going to become more and more important to us as we look out because there's not a great aspect of the corn market moving a great deal higher just yet. Storage may seem to be the only way out of it, but so we're going to have to use some of these premiums in the back months to be able to market some of that corn with. And again, there's all kinds of strategies and derivatives that are available to you that might be able to help you make a little bit more off of that, or at least keep from losing a little bit more, all depending upon what kind of marketing and sales that you've got for this time of the year. See, is the soybean market's any better? It's not. Down 17 3/4 on the August at 10.37 even. The September contract down 18 at 10.12 even. And the Novi beans, what everybody's looking at, 10.23 down 16 1/2. Beans are kind of the same way, and we seemingly have lost a great deal of our demand from China. Other aspects that I've seen of their economy kind of lead me to believe they're going to continue to be in some kind of lower type economic situation for quite a while. So our beans, bean meal, the one thing that really interests me right now is bean meal, simply because of the price alone. $352 a ton out to December at $320 a ton. So note that we have an inversion in this market. There is no carry. So the meal market, even though seemingly in a pretty good bear market, is still carrying a premium to the top end. So if you need some meal needs right here, it's coming down about $100 to $125 from where those previous highs were just less than 6 to 7 months ago. So a pretty good decline that we've seen in the bean meal market might catch the attention of some of our producers in the hog and poultry industry. See what the wheat market is doing now. Chicago wheat down 3 1/4 at 5.27 3/4. The December down 3 1/2 at 5.51 3/4. Old crop July, new crop July, 5.87 1/2. So got about a 50-cent premium on it all the way out into it. Kansas City hard red winter wheat, still softer, down 7 1/2 on the SEP at 5.46 even. December down 7 1/2 at 5.61 3/4. July down 7, 5.81 3/4. And let's see, Minneapolis spring wheat, it was softer as well, down 7 3/4 on the SEP, 5.83 3/4. December down 7 3/4, 6.01 3/4, and May down 7 1/2 at 6.29. We're going to wrap it up with cotton here. Cotton a little bit firmer now. Still hadn't been able to get back above that 70 handle, but we're at 69.39, up 18 on the December new crop cotton. Y'all stick with us. We're going to go away, take a real quick commercial break, and we're going to come back and talk livestock with me, Chris Swift. Stay with us. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. All right, welcome back. Let's take a look at our live cattle market and see what we're trading at now. Still holding some fairly good gains. I got August fats at 187.55, up 57 on the day. And if I'm not bad mistaken, cash cattle in the south brought 188 last week and 190 in the north. So it's going to be interesting to see how we continue with that. Pretty even basis right now, less than 50 cents on both of those contract months. And we know that the boxes have firmed just a little bit, or probably better said, they just kind of stopped going down. Yesterday's trade was 314.81 in the boxes. Right now, I got October fats at 187.17, up 37. Got the December up 22 at 187.90. See what our feeder market is doing. It's lost some of those gains, but still trading plus on the day with August up 17 at 256.60. Yesterday's feeder cattle index reading was 258.75. So again, we have gone into a positive basis now in the feeder cattle. And seemingly yesterday, with some of the declines that we had, traders weren't too shy to go in and push that positive basis just a little bit wider. So we kind of seen a little bit softening in the index. The index has not gone down much. We're less than $4 or $5 from the all-time high of the feeder cattle index. We wrapped up tremendous amount of volume of sales over the last couple of weeks through the videos. So now we're going to get down to just lesser cattle, and from probably September on, a lot of those cattle will just be delivered rather than just being marketed, because they've already been marketed in those sales. The September contract up 12 at 256.20. October feeder cattle down 12 at 255.07. No feeders down 25 at 254.17. And the one to really look at, with all of the discussions that we got of fewer animals going forward, January is at a significant discount, $251.92, down 30 on the day. A little about almost $4.50 from the spot month, and from the index reading at 258, very good, $7 from that as well. So it's going to be interesting to see how we trade going forward now. We got a lot of volume moved. Those individuals that sold it at the high, and the individuals that now own it, that may have anywhere from a 3 to 6 month production window, own that inventory at the high. So kind of remember, look at what the strategy is of what we're trading, what you're trying to accomplish on there, and what prices are still available to you that once were not. So let's see what we got in the hog market. Up 12 on the August contract at 91.57. Yesterday's lean hog index was at 91.85, so we're right in line with the basis. The one that interests me the most is December at 67.75, down 10. That's an exceptionally wide basis, although it probably has been wider in the past. But now we know that we're either going to see the cash hog market plummet, we're going to see the futures market rally sharply, or they're going to meet somewhere in between the middle there. So for a hog producer, this really doesn't look very good, simply because you got such an enormous positive basis out there and nowhere to sell that product into the future at a little bit different price, or a little bit higher price. So going to be interesting to see where our hog market does. We know we've got a consumer that is absolutely chocked full of high, expensive proteins there in the grocery store. So we're going to see how they're all going to carry out for the time being. So
yeah, a lot of different dynamics at work
really
here.
is. And so most interesting to me in ours, we're starting to lose a little bit of packer margin. So with the loss of that packer margin, now they're having to move into different ways. So they'll cut kills again. They're trying to gain more weight to it. And this dairy beef cross that you had the article on a little bit earlier there, that part of the industry has really fascinated me, because although it's been around forever, over the last year or two, it's gained a tremendous amount of attention as well as investment dollars. So those investment dollars coming in there, and we've seen some new issues come out with that says it's here to stay.
Right. It's like it's not anything new, but it is just
really
coming to the mainstream
It really is. It's starting to move to the forefront now.
Yeah.
We'll be a large producer of beef going forward from this time.
All right. Thanks for that update, Chris.